Good afternoon and welcome to Asian BizTech Market Watch. It's 20th of August. I'm Samantha Voon and my co-host here with me is Brian Fernandez. Now let's start by taking a look at the summary of market actions today. Now, Asian equities mostly saw gains following the strong rally on Wall Street driven by hopes of the imminent US interest rate cuts. Now, markets were lifted particularly in the tech sector. Investors are now eagerly awaiting Fed Chair Jerome Powell's speech this Friday at Jackson Hole Symposium. Now, in contrast, Chinese market lagged behind as the People Bank of China (PBOC) kept its benchmark loan prime rates unchanged as expected. Now, although this PBOC decision was largely anticipated, it did disappoint some traders who hoped for further rate cuts, particularly after an unexpected reduction in July. Now, Japan led the Asian market rally with the Nikkei 225 advancing by 2.03% at its 3 weeks peak. Now, these gains were largely powered by the strong performance in tech stocks, which followed similar trends in the US. Now, an outlier here was 7&I Holdings, which fell more than 6% after investors took profit after seeing significant gains yesterday. Now, this company's stock had surged over 20% after reports surfaced that Canada's Alimentation Couche-Tard was interested in a potential acquisition. Okay, Brian, over to you with the rest of the updates.
Now let's look at broader Asian markets. They showed mixed results. South Korea's Kospi increased by 0.73%, 0.74% driven by tech stock gains, while the ASX 200 was up 0.16%. The advance in Australia was limited by the Reserve Bank of Australia's August meeting minutes, which indicated that the central bank had considered raising rates to address persistent inflation. The RBA, however, suggested that high interest rates could be maintained for a longer period, a stance that may weigh in on Australian market sentiment. Now, additionally, given their trade relationship with China, concerns over China's slowing economic growth put further pressure on Australian equities. Now, over in China, Chinese stocks trailed behind other Asian markets as the PBOC opted to leave its benchmark loan prime rate unchanged, cutting short a brief recovery from recent lows. The Shanghai Composite Index declined 1.02%, while the Hang Seng Index in Hong Kong slipped by 0.25%. Now, despite some signs of improvement in consumer spending and inflation during July, the overall outlook for the Chinese economy remains cautious due to ongoing concerns about slowing growth. Now, that's it for today's market updates. Now, to give us further insights, we have our guest today, and we have Eddie. And let me bring Eddie on stage. Eddie Tofpik, he's the head of technical analysis and senior markets analyst at ADM Investor Services International Limited. Now, he's coming to us out of the UK. Now, good early morning to you, Eddie.
Good morning to you. It's a pleasure to be here.
Yeah, good to see you, Eddie. So let's get straight into it. Do you have some insights to share with us about the US dollar index right now, Eddie?
Yeah, if you could put up the chart, you can see there are three ways this market, there are three levels of bearishness in this market. On the longer term, we have the December to April move down, which is this series of shallow bearish lines. More recently, in April, we've turned lower with another series of Andrew's pitchfork lines, which are moving lower still. But the very, very recent thing, which is late July today, is this highlighted blue bear channel that you can see heading lower. Now, this has broken through yesterday the lows of early August and also the early March, mid-March lows. That then is the pressure for the downside, which could move it down to par, somewhere around about the 100 area possibly, because that's the next area of support, just above the 100 area. What's also interesting is there is an argument for a potential head and shoulders top here, which you can see with those three humps. The only problem I find is that it's not that good, but then no chart pattern ever is that good. But there's an opportunity for further bearishness from this head and shoulders pattern. And that could be a movement down to round about the par 50, par 80 area, somewhere around this sort of area around here. So at the moment, the pressure is for weaker dollar index. And obviously that means a weaker dollar against most currencies.
Now, I want to keep on the US theme there, and let's talk about the NASDAQ 100. Now, we've had a lot of price action, volatility on NASDAQ in particular. And NASDAQ, obviously, the 100 is very heavily weighted, particularly in the Magnificent Seven, where all the gains have basically come on. Walk us through then your thoughts then, Eddie, on what the market technical analysis looks like.
Sure. Now, if you look at the chart on this one, you can see here.
Eddie, you need to share your chart again.
Oh, yeah. My apologies. I have to go and share it again. Please bear me a second whilst I do that. There we go. You should be seeing it now. There you go.
Yes.
Okay.
Absolutely.
The situation is you've got from October last year through to April, we had this Andrews pitch which is showing the bullish angle of attack, and it was pretty good. It broke down in late July, and we moved down to the long moving average, which today is at 17,904. And it held there. It literally dipped below it, didn't like it, and closed straight above it again, formed the base, and we've had a move up. We've had two gaps. There's usually going to be a third, so look for another third gap somewhere in this area here. What's most interesting is that yesterday we closed above not only the original light blue line here, the lower trend line of the Andrews pitch lower time, but also above the middle time of this new one, which is based around the action from April to August. So the pressure at the moment is towards the top side. The 50% projected Fibonacci level, as you can see there, this one I projected from, and I can show you where it did. It's from the action from October to March. Well, it was amazing how back in early July, it literally peaked there and came straight off. So it does show that the technical analysis is working on this and people are using it. So at the moment, I think you wouldn't be surprised to see a move up towards filling in. We've already filled in, excuse me, these gaps here on the downside. There's one more gap left on the top side we need to fill in. So it wouldn't surprise me to see something in the moving around the 2400 area, 2100 to 2400 area.
So from a technical perspective, then you're seeing much more upside in the market then?
Yeah. The patterns are all pointing upwards. There's nothing immediately which is saying, oh, this is heading back down again. There's nothing at the moment. That being said, we're coming into the period of the year where we always need to be careful, which is roughly from mid-September to the end of October. So the picture the next 30 days, 20 days, could change very, very rapidly. But at the moment, the picture is for another attempt on the upside.
Eddie, thank you very much for your insights.
Thank you very much.
We've been speaking to Eddie Tofpik, Head of Technical Analysis and Senior Market Analyst at ADM Investors Service International. This has been BizTech Asia Midday Market Watch, and be sure to keep informed with the latest market updates weekdays at 1 p.m. I'm Samantha Voon.
And I'm Brian Fernandez.
And this video and podcast will be on our website, www.biztech.asia, and our social media platforms. It will also be on our syndication partners' TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.